All right. Today is Thursday, May 13. This is a recap for the stock market activities today. We are combing through the rubble from yesterday. As we discussed during last video, the market experienced a panic selling day yesterday where both the Dow Jones, the S&P 500, and the Nasdaq closed down in the red severely. Now the market is combing through and reflecting on the move from yesterday. Which names were unfairly punished yesterday? And you saw dip buying in these names. So what did the market decide to do? It did not pick the ARK Invests of the world. It did not pick the mania names, the likes of Tesla and Palantir. Instead, it picked JP Morgan, for example, and UPS, meaning that the market is saying, yes, inflation is rising higher, and that should punish the NASDAQ, the mania high multiple names, but not the financials and industrials who naturally benefit from inflation. All in all, markets across the board, the Dow Jones, the NASDAQ, the S&P, all closed in the green, meaning that we saw a bounce in the market earlier than I expected. I expected another down day, a flush down, and then a bounce on Friday. And by the way, this scenario would have been more favorable to the bulls because you need a quick washout, a big one, and then a reliable bounce higher. What you don't want to see is a big down day followed by a massive rebound right away because that suggests that we have more volatility on the horizon. We're seeing dip buying now, but as the market starts to process more information, it reverts back to the main move, which is the bearish move, the reversal, which also indicates that the sell-off is not over yet. The other thing is we must be able to distinguish between a legitimate dip buying versus an oversold buying. When you see names, and you will see names, by the way, the likes of ARK Invest and Tesla bouncing significantly higher very soon. We will discuss that during the technical analysis. But you will see these bounces higher. You have to distinguish. Is this legitimate dip buying or is this just an oversold bounce? You know that when you combine the technicals with the macroeconomics information. If ARK Invest bounces higher, 2, 3, 4, 5%, is this legitimate buying or is it short covering and bouncing of oversold conditions? In contrast, you will see inflationary names selling off and you will see legitimate dip buying because the macroeconomics environment is still favorable for these names. Remember, even if the monetary policy tightens and we see tapering, the fiscal side has not spent the money yet. We're talking about trillions and trillions of dollars that will go in infrastructure and other programs, meaning that we will see high demand for steel, aluminum, etc. And therefore, let's say Alcoa, for example, an aluminum play. If we see a steep sell-off in this name, followed by a bounce, that should be a legitimate dip buying opportunity, not just an oversold bounce. Why am I saying that, by the way? Because we have to strategize. We're traders and we have to prepare for the next move. The ARK Invests and the likes are in oversold conditions, meaning that there is a big bounce imminent. That doesn't mean that we're not going to see more selling before this bounce happens. We will take opportunity of this bounce, the oversold bounce, by buying call options. On the other hand, in the case of, say, Alcoa or Hubbell, Deere, these inflationary names, if they go down 10, 15%, at least for me, I will buy the dip legitimately. Not just playing a bounce, but I have been looking for a buying opportunity for a long time in certain inflationary names. Once again, differentiate between oversold bounces versus legitimate dips to buy. The other thing I want to talk about is that this market is turning around. It had a pretty face last year, but now we're seeing the ugly face, at least for younger and amateur investors who joined the market last year. Of course, they're accustomed to what they saw. Stocks only go up and there are no red days. You buy the stocks that you like, the stocks that you believe will form the future, and you're good to go. To the moon. That is changing due to the change in the macroeconomic environment of inflation and interest rates rising higher. And now you are seeing these same names losing 30, 40, 50, even 60% from the highs. And that is causing a lot of pain in the younger trader and investors community. It doesn't have to be younger in age, but the generation of investors who joined the market last year. And they don't have the experience yet. They had the beginner luck, and now they are experiencing a lot of pain. While the market is pretty much trading at all-time highs, these names are down 50, 60% from the highs. So we have two markets. One market that, yes, faced a correction yesterday, but the damage is small. Take a look at Microsoft, for example. There is some damage, but the name is trading at all-time highs, pretty much. Another name like Palantir, down over 60% from the highs. Palantir happens to be one of the retail investors' favorite names, and they're holding massive bags here. So the market pretty much is saying no country for young men. But perhaps this is a learning opportunity, and we need to learn to improve as investors and traders. So here it is for younger and amateur investors who joined the market last year. When interest rates rise higher due to inflation, the present value of future earnings gets diluted. Meanwhile, the future value of present earnings increases higher. What does that mean? It means that companies that make money right now in the present time, as interest rates continue to rise higher due to inflation, those earnings, the present earnings, expand in value because they will be worth more in the future. On the other hand, companies that are pre-revenue, pre-earnings, the startups, some of the software names, the retail crowd's favorite names, they tend to thrive when interest rates are trending lower. But when interest rates reverse, trending higher, then once again, a reminder, the present value of future earnings gets diluted, meaning that we are valuing these companies based on the future bro, remember? But those future earnings get diluted in value if interest rates continue to rise higher in the present time. You need to familiarize yourself with the discounted cash flow and the net present value formulas. So when you buy the dip, you want to buy the dip in names that make a lot of cash in the present time, not the future. The other thing that I'm not going to talk about during this video, but in another video, is the con man of the century, the fraud father, who, as I predicted, by the way, stabbed the culties in the back by dumping Bitcoin, saying that Tesla would not accept Bitcoin as a form of payment due to the environmental concerns. Really, Elon? You didn't know that before when you were pumping Doge and Bitcoin? Of course he did. But it was a quick flip for him, quick profit, lots of publicity, and he's done with you right now. Just like Jim Jones told his followers to drink the cyanide, Reverend Elon Musk will also cause your death. You gotta get out of the cult as soon as possible. But we'll talk about that in another video. The other point that I want to address with you in this video: why did the market bounce higher and yields were tamed today, even though we got the producer price index number, which came double the estimate, signaling that inflation is rising rapidly? In my opinion, the correction is becoming contagious all the way to the commodities market. And you saw a correction in energy, grains, metals across the board. In the commodities market, one source, perhaps one of the major sources of inflation, are commodity prices. So yes, the producer price index came hot. We have the CPI report yesterday also came out hot, but commodities are correcting. And for now, that tampers inflation expectations. Of course, these commodities are not going to run in a straight line upward. You're going to have corrections along the way, but the trajectory remains higher. So the moment commodities are done correcting and they start bouncing higher again, you will see inflationary fears spooking the market again. Anyhow, we have a lot to discuss and very little time, so let's move on to cover the market's performance today. And here we go. The Dow Industrial Average closing in the green by 433.13 points, or a gain of 1.29%. The Nasdaq closing in the green, even though it was in the red at some point today. But here it is, closing in the green by 93.31 points, or a gain of 0.72%. Of course, the big names, Apple, Microsoft, Google, Facebook, in addition to the semiconductor names, those are the ones that managed to close the Nasdaq in the green. But again, two markets, if you are in the young crowd chasing the mania names, you're looking at Spotify and Shopify, Square, Palantir, Neo, today was a crash. But for the Nasdaq as a whole, no problem at all. Microsoft, Apple, all gaining big for the day. What about the S&P 500, also closing in the green by 49.44 points, or a gain of 1.22%? What about the sector's performance today? Lots of green, the opposite picture from yesterday. Leading the pack at number 1 and capturing the gold medal, industrials. At number 2 for the silver, utilities. And at number 3 for the bronze, financials. Meanwhile, the only laggard today is the energy sector closing decisively in the red. We saw a sell-off in the WTI, and we will cover that in a little bit. What about the advance to decline ratio? The NYSE 70% advancing versus 28% declining. The Nasdaq 49% advancing versus 49% declining. So the market was pretty much even in the Nasdaq. Once again, the battle of two markets. If you are in Microsoft, Google, Facebook, you got no problem at all. If you're on Palantir, Airbnb, Shopify, Tesla, you got a problem. Moving on to the futures market performance. Big down day for crude oil, WTI, and Brent both down about 3.5% apiece. Gasoline also down, and we heard the news that the ransomware attack is over. They paid the ransom in cryptos, and we will see the flow of gasoline perhaps as soon as early next week. And therefore, you're seeing the pump in gasoline prices going down. What about softs? The only gainer, OJ. But we saw big down days for lumber, sugar, cotton, and coca futures. Coffee futures muted today. What about metals? Muted activities for gold and silver. No decisive move one way or the other by yields or the US dollar today. And therefore, gold, silver flat. Meanwhile, copper and platinum saw a mini sell-off of about 1% or so. Palladium also muted along with gold and silver. We will see how the dollar and yields move as we start the next week. What about meats? We have a correction here. The piggies getting slaughtered. Not really, just down a little under 2%. And then we have live cattle down about 3% today. Meanwhile, feeder cattle futures flat for the day. But the bulk of the pain was in grains futures. They experienced a big down day. Whether we're talking about soybeans, soybean meal, corn, canola, oats, rough rice, all down big today. Once again, that is tampering inflation expectations. Every time we're going to see a correction in the commodities market, you will see inflation expectations getting tampered. Likewise, when we see a correction in the stock market, that is also disinflationary because consumers become less and less confident than before. But the root of the problem causing this inflation is the money supply and the cocaine operation by the Federal Reserve. That's not going to stop anytime soon. The Fed is saying, we're not convinced that this inflation is transitory. We want to see more. Okay, you'll see more, meaning that inflation will continue to rise higher, and these commodity prices will recover and continue to rise higher. But they also are due for a correction. You can't go to the moon in a straight line. Moving on to the big casino, the options market. What's going on here? Apple at number one with about 1.3 million contracts. About 68% of those were calls. At number two, we have a gamma squeeze for AMC up over 20% today, along with GameStop, by the way. The YOLO names catching a bid. Big action here for AMC in the options market. A little over 1 million contracts. About 73% of those were calls. Bear in mind that the options volume for AMC was pretty much equivalent to the options volume in Apple, the biggest stock in the world. So this is a massive action for AMC. And remember, AMC and GME, GameStop, have a massive weighting in the Russell 2000, specifically the IWM. We saw the IWM up today, and it was up big in the morning on the heels of the rise in AMC and GameStop. But here we have Alibaba at number three with a little over 600,000 contracts traded today. About 69% of those were calls. Alibaba down big today on the heels of earnings. I think it was their first miss since the IPO. What about the unusual trades taking place in the options market today? Let's start by the ticker ARKK. And this is for ARK Invest, Tesla Witch, Cathie Wood. Tesla Witch Cathie Wood has been gambling left and right, all over the place, dumping Apple and buying mania stocks with no revenue and no profits. What an investment genius, don't you think? And the bears are piling up on RKK. And by the way, when you see a pile up like this, the bears are borrowing the shares and they are selling them, adding to the downward pressure in ARK Invest. The name is oversold technically, but the pile up from bears could result in a lot of pain before the bounce. This is at least what this trader is saying by buying the 90 puts expiration date June 4th with expectations that the RKK will go down over 9.5% by then. They paid about $2.25 a piece to enter this trade. All in all, bringing the total to about $4.6 million. What about the ticker LVS for Las Vegas Sands? I happen to be a fan of the name, but we saw a lot of activities, a significant rise in the options volume for for Las Vegas Sands. For this trade, the trader is making a bearish bet, a big one, by buying the 50 puts expiration date June 14th, with expectations that the name will decline over 11% by then. They were willing to pay about 45 cents apiece to enter this trade. All in all, bringing the total to about $800,000. What about the trade for AMC? While we're at it, I'm talking about the one right under the LVS trade. In this case, they're buying the 12.5 puts. Somebody's calling a top here, and the expiration date is May 14th, with expectations that the AMC will decline over 6% by then, and they paid about 47 cents apiece to enter this trade. All in all, bringing the total to about $680,000. What about the trade for the ticker TAL for TAL? This is a remote education company, and it got hammered significantly. It is down big year to date. Somebody's betting for more declines to come for this name by buying the 40 bucks puts expiration date June 18th, with expectations that the name will drop over 14% by then. They paid about $1.20 a piece to enter this trade. All in all, bringing the total to about $1.4 million. What about the trade for the ticker GT? This is for Goodyear Tire. This is a bullet stock, by the way. It hasn't been in favor for a long time, but this macroeconomic environment favors Goodyear Tire because rubber prices are rising significantly higher, meaning that GT could pass the extra inflation to the end customer. We have a significant surge in demand for used cars, new cars, EV vehicles, lots of production. Well, they need tires. Even if you're producing an EV, that still needs tires. Goodyear provides all of that. Classic inflationary name. And somebody's making a bullish bet here by buying the 22 calls expiration date July 16th, with expectations that the name will rise over 14% by then. They paid about 60 cents a piece to enter this trade. All in all, bringing the total to about $450,000. Lastly, what about the trade for the ticker EH? This is for EHang. Whatever that is, stay away from drugs, kids. Can you invest in a regular name? Why do you have to pick a Chinese name that you know nothing about? Anyhow, the name was down big today, but they're calling a bottom in this trade by buying the 25 calls expiration date July 16th, with expectations that the name will rise over 16.5% by then, and they paid about $3 a piece to enter this trade. All in all, bringing the total to about $2 million. Moving on to the heat map and themes analysis. Let's see what's going on here. Pretty clear. If you placed your bet anywhere on the roulette table, you managed to score pretty big. With exception, you guessed it, the high multiple mania names and some oil names and material names. Other than that, if you bought financials, if you bought industrials, healthcare, even the big cap technology names, big gains today. What does that tell you? The market believes that there is still more pain for the mania names. It is willing to buy the dip at least for a day right now in these names: financials, industrials, defensives, healthcare, even the big cap technology names, but it is not ready to buy the dip in these mania names, at least not for now. But looking at the map all in all, you cannot make a definitive conclusion one way or the other. For now, the consistent theme so far this week is the healthcare sector, specifically the big pharma names. So that seems like the safest place for now to park. What about the themes analysis? What's going on here for the reopening names? Are they buying the dip in the reopening names? Of course they are. That wasn't the case earlier in the day. That all changed after we heard from the CDC issuing new guidelines regarding masks, saying that if you are vaccinated, you don't need to wear masks even indoors. And the reopening stocks got rewarded right away. Now, and this is important, if we are going to relax the mask mandate, that will mean that more of that pent-up demand from the consumers who did not go out and spend their money, their stimulus, and their savings, perhaps because they are uncomfortable and fearful still when it comes to the virus. However, removing the mask mandate, once you start seeing people indoors with no masks and things start to look normal, you will see that slice of the population that are not going out and spending feeling more comfortable to go out and spend. And that will push inflation higher. And therefore, we're sticking with the inflationary trade, the reopening names, specifically the ones that caught a nasty correction. The dips are to buy in these names and the inflationary names. Speaking of, what's going on with the inflationary names? Here it is. Big gains across the board. Whether we're talking about banks, industrials, CarMax, you saw the data regarding the used car prices. If you have a used car, this is a seller's market. Change the oil, keep it clean, and flip it for a nice amount of cash. That is good for CarMax, by the way. Lots of gains for Waste Management, UPS, Martin Marietta. They're buying the dip aggressively in these inflationary names. What about the disinflationary names, specifically the high multiple mania names? We're talking about DocuSign, Square, Shopify, etc. Declines across the board, with exception of Peloton, for example. Peloton is seeing short covering because everybody went short after the recall, and now they're short covering. Once again, these are the names you want to trade the dip for. The high multiple names. Not GM, not DR Horton. Focus on the high multiple names. And I will perfect these lists over the weekend, by the way. But these high multiple names, you trade the dip. You don't buy it. For the inflationary trade, you buy the dip. But also use your head because the correction might not be over yet. How do we know if the correction is over or not? For that, we need to visit the technicals. And here it is, starting with the SPY, 30 minutes chart. What's going on here in the SPY? We have a rebound day bouncing off the support of 406, but facing the resistance of 412 by the end of the day. 412 was the most important support line to hold. Once you break that, you're not just going to go down for one day and bounce higher like nothing happened. There is more pain to come. And by the way, we welcome the pain in the SPY, because a correction in the SPY will mean the financials, industrials, metals, materials, energy, all the inflationary sectors of the market are correcting, meaning that we are looking for dips to buy in these names, and we are getting these dips. All of you who said, I don't want to buy Martin Marietta right now, I'm waiting for a correction. Suppose the correction is here. Martin Marietta is down 10, 15%. Isn't this the dip you are waiting for? Do you have the balls to buy the dip after a 10-15% correction in a stock that still has favorable macroeconomics? We want to see more declines here, folks. This is good, not bad. You need to see a correction in the SPY. How far can it go? For that, we zoom out to the daily chart of the SPY. What's going on here? Rebound higher, but not closing above the highs of yesterday's candle, meaning that for all we know, this is a dead cat bounce and we will see more declines to come. The momentum in the MACD indicator remains extremely negative. We still have the negative divergence in the RSI, and the target here should be 3,960. Moving on to the Qs. Different story here. You gotta be selective in buying the dip via trading, not straight out buying. The center of gravity remains 323. We had the dead cat bounce followed by the massive decline of yesterday's activities. We formed a gap from the drop that hasn't been filled yet. You see it in the yellow bubble. That hasn't been filled yet. And then from today's activities, from the gap higher in the morning, here was another gap. This gap was filled and the Nasdaq managed to bounce higher after filling the gap. So that is positive that the chart did not close below the gap. On the negative side, why couldn't the Qs gather the momentum to go all the way and recapture 323 after closing the gap? We actually made a lower low in intra-day activities, signaling that the Qs remains extremely weak. The short-term picture tells one story where you can see the bear and the bull argument. The bull says, we closed the gap and bounced higher. This is positive. The bear says, but you haven't closed above 323, which leaves room that we will see a reversal back to the downside. To settle the argument, let's zoom out to a daily chart for the futures contract for the SPY. We are not at a hard support level. We have not bounced from a hard support level. What does that mean? The likelihood is we will resume the decline to the downside. And the next hard support, strong support, is 12,766. That should be at least a short-term bottom. And therefore, I was saying I would have loved to see a decline, a down day today, a flush down all the way to 12,766 and then bouncing higher. That did not happen. If it happened, we would have been already at the short-term bottom. Confident that the bounce will last at least for a day or two. But this bounce came way too early, and you cannot trust this bounce. You gotta see and wait for a confirmation. The negative divergence in the RSI persists, and the chart is still registering red impressions in the histogram of the MACD, indicating that the momentum remains to the downside. What about the IWM? Small caps, you are aware that the IWM became a meme ETF due to the weighting of GameStop and AMC. These two stocks blasted higher today, and as a result, the IWM gapping higher today, going all the way down to close the gap from the activities from yesterday and bouncing higher. This is a short-term positive activities, forming a double bottom formation, signaling that the IWM has the capacity to go all the way to the resistance of 218. And here is the bear argument. It doesn't matter where the IWM bounces to, because looking at this from a larger frame, you could see a bear flag formation that will result for more downside in the IWM. And to confirm that, zooming out to the RUT, the RUT, the Russell 2000, we are now trading away from the very important level of consolidation of around 2,264. We've been consolidating around this number for months now, and we know that all of this energy will be released one way or the other, to the upside or to the downside. The bulls had the advantage for a while, but now the bears are turning the table once again. So from the grand scheme, the bigger picture, the bears have the advantage in turning the Russell 2000 to flush to the downside. And I am identifying a new line in the sand. Here it is, 2,100, closing the week below that number. And I will be shorting the Russell with both hands. Moving on to the Dixie, the dollar index. What's going on here? The dollar muted, flat for the day. It is still gathering momentum, gathering energy for a pop higher, perhaps all the way to the level of 92. Now, reading the tea leaves, why would the dollar index shoot up higher? Well, we have the technicals, the positive divergence in the RSI, and the imminent crossing in the MACD indicator to the positive territory, creating green impressions in the histogram. But here is another explanation. If the dollar is set to rise higher, isn't this an indicator that the sell-off in the stock market is not over yet, because we will see more rush to raise cash? I'm just reading the tea leaves. What about gold? What's going on here? Gold bouncing slightly higher today. We saw muted activities for the dollar index and a slight downturn for yields. Remember, gold has two enemies, the dollar and yields. If these don't blast higher, gold is in the green. In addition, there's a third nemesis here in cryptos, specifically Bitcoin, the quote-unquote digital gold. Well, Bitcoin was down big today. That is also supportive for gold to rise higher. But I'm not betting on gold as a hedge against inflation, because we have this inverse relationship that's been going on for a while between yields and gold. And until and unless I see gold rising hand in hand with yields once again, I'm not calling gold as an inflation hedge. Show me the money first. Prove it to me and I'll believe you. What about BTC? What's going on here? Big down day. The con artist of the century, Elon the Con, or as we know him in this channel as Reverend Elon, stabbing the culties in the back by saying Tesla's not going to accept Bitcoin anymore due to environmental concerns. Wink, wink. And the culties, of course, are mad at Elon, which is quite hilarious, by the way. This is what we've been waiting for, predicting and waiting for. So lots of popcorn popping in the Maverick of Wall Street household. I'm just reading the comments and having a good time. But BTC was set to fall anyways, with or without the comments from Reverend Elon Musk, because we had the giant bear formation, bear flag formation. We had a crossing in the negative territory in the MACD indicator, and the negative divergence in the RSI still holds. And the volume is increasing in days where Bitcoin is being sold. Lots of indicator here. Way before Elon came out, were telling us, watch out, there is more downside for Bitcoin. And the destination for now, 42,000. We should see a bounce at that level. If not, watch out for the floodgates, because the next reliable support is around 26,000. What about the other tulip, the fraud father, has been propping up? Dogecoin, what's going on here? We talked about the very important level of 40,000. cents. If you break that level and you start closing 2-3 candles below that level, you're done. And you saw Doge breaking that level, trying to climb back, only to get rejected again. Extreme bearish formation. What is the next support, by the way, you may ask? Zero. That's the support. This garbage is worth nothing. What about yields? What's going on here? We saw a down day for the 10-year Treasury yield. We had the auction for the 30-year, and that was okay. It wasn't mind-blowing, but it was okay. A little better than expected. And therefore, you saw yields retreating just slightly, but forming a bull flag formation that should play to the upside. What about bond prices, the TLT? What's going on here? Not looking good. You have a negative divergence in the RSI, and you have a negative crossing in the MACD indicator, and the TLT is starting to lose all of the support from the Fibonacci retracement levels. The line in the sand remains 134.5. Closing below that number from a weekly basis, and the floodgates will open. What about the VIX? Retreating today, but yet closing above the lows of yesterday's candle. What does that tell you? There is a lot of momentum still behind the VIX. And by the way, go back and look at the previous pops, the recent one at least, in the VIX. Here's one pop, lasted for a day, precisely, and we saw declines right away. Here's another pop, lasted for a few days, but went down and retreated very fast. What is the difference this time around? Check out the MACD indicator, the momentum indicator. For the first pop, there wasn't a significant period of energy gathering, meaning you did not see lots of green columns in the histogram of the MACD prior to the pop higher. That was just a pop in momentum that lasted briefly and the VIX went down. This pop that we're at right now was preceded by a lot of momentum. All of these green columns that you see in the histogram of the MACD, all of that is energy that is about to be deployed higher. When do I change my opinion? If we go back to the level of 20 and the VIX fails to bounce, that will be the line in the sand. If you cross 20, it's over, meaning that the correction in the SPY is also over. What about Apple? What's going on here? We have lots of gaps here. We saw the reversal before closing the gap. That was a bad signal. And Apple gapped lower. Today it is gapping higher, and in doing so, closing one gap at least and recapturing the support of 125. Apple looking a lot better than the broader NASDAQ. By the way, you see all of these gaps on the way down, but you gotta zoom out to a 1-hour chart and you can see that all of what Apple is doing from all of these declines the last few days is closing the gaps that it created on the upside. And therefore, every time you see all of these gaps higher, these moves don't last because the chart has to go down and close the majority of these gaps. Doesn't have to be all of them, but most of them. And the same story when you leave gaps going down, meaning that Apple at some point will recover and close all of these gaps that it created on the downside. But it has more gaps to fill from the move to the upside. And the most important gap to fill is at the level of 120. If Apple goes down all the way to 120, I will be buying with both hands. And once again, will I be buying the stock or would I be buying calls, trading? Remember, yes, Apple generates a lot of cash in the present time, but the name is not favorable under high inflation due to the valuation of Apple, the elevated valuation. Those multiples have to be cut. Therefore, trading Apple, buying calls at 120, not buying the stock. What about Tesla, the souffle? Lots of pain for the souffle. And of course, crossing the line in the sand at 679 opened the floodgates. But the chart is starting to reach oversold conditions in the RSI indicator, meaning we're looking for a bottom here. We're looking for support. Where is the support? In my opinion, you are at it right now, but this is a soft support, the strongest support at 540. If Tesla goes down to 540, I will be buying calls, playing a bounce. You can hate the stock, you can hate the product, or even the founder or the CEO, it doesn't matter. But you gotta be pragmatic in your trading. And by the way, lots of you guys who made money buying Tesla puts, at what point are you gonna book profits? You gotta wait for Tesla to go up to bounce 5-6% before booking your profits. Remember, the first rule in options trading, always be closing because your contract is timed. The longer you leave the contract open, the more it declines in value, assuming the stock is not blasting higher and higher or lower and lower, depending on which side are you betting for. You book profits, and if you are still bearish, you roll down and forward. What does that mean? You book your profits, by closing the contracts you have right now and you roll down. For example, I bought the 670 puts expecting Tesla to break below the line in the sand at 679. The name went all the way down to 600. I closed the puts for big profits and now I am rolling downward, meaning buying the 550 puts expiring a little further down the road. June, July, August, doesn't matter. But close your immediate expiration date trades. That doesn't mean that I'm going to open contracts right now. Matter of fact, I could play a bounce higher before opening these contracts. Stay disciplined and pragmatic when you trade options. Now, what happens if the souffle goes all the way down to 540, breaks that support, failing to bounce? And the floodgates will open and you see this gap all the way down below 400. That will be filled once and for all. But for now, what I'm seeing is the RSI reading is becoming oversold. So I am anticipating a bounce and I am looking at 540 as a target to bounce from. Moving on to the RKK, what's going on here? In Tesla Witch Cathie Wood land, we had the massive bear flag formation that is playing to the downside, breaking a very important Fibonacci level, which happens to be or coincides with the trend line starting all the way back since last year. Now, RKKK is in an excellent area of support of 99. It should be able to bounce from that level. I'm not hoping tomorrow because I still have puts. I want to close them first and then ARK can bounce freely. The RSI reading very oversold. But remember, the bears are piling against this name aggressively, and all of the gambling that Cathie Wood been doing as of late could result in an unforeseen risk of extreme liquidation, and that will be the equivalent of what happened with the margin calls for RKK Gegos. By the way, here is the sentiment. The retail crowd was putting their blindfolds on, running Naruto style, heads first, buying non-profitable tech, aka the names that Cathie Wood likes and the names in the RKK and RKKG and RKK whatever, genomic whatever, revolution, destruction, I don't know. But now we're seeing a turn of fortunes here, and we have a massive bear flag formation, meaning that if non-profitable tech goes down, the question is, when do the retail traders and investors get slaughtered via margin calls? When the margin calls happen and hit Robinhood accounts, you will see non-profitable tech collapsing, crashing right away along with the RKK. Therefore, I am predicting that we will see the implosion of ARK Invest. Rest in peace. Here's another chart for BAC, Bank of America. Last week, I told you that I've been buying Bank of America calls for weeks now, playing the Fibonacci retracement levels. And I am eyeing the level of 44 as an exit point. And if Bank of America starts to decline from that level, I mean, the move is vertical pretty much. It's one straight line to the upside with few days, few weeks of downturns. And the RSI reading is extremely high, overbought. The question is, when do we lose momentum in BAC and the financial sector of the market? Once that happens, banks will go down. But remember, the momentum is never going to leave financials, because remember, so long as inflation is rising higher and interest rates are rising higher, meaning yields, then banks are the most favorable sector of the market to invest in, meaning that the dips in these names, the corrections in these names should be bought and will be bought, by the way. Here are some more charts for you regarding the broader market. You have the correlation between growth and value versus the S&P 500. Last time around, we saw a reading this low. It was back at the top of the dot-com bubble. We have now surpassed that reading to the downside, suggesting that perhaps we've also reached a top in the S&P 500. Here is another indicator for the change in sentiment from growth to value. The last time we saw the Russell 1000 value outperforming the Russell 1000 growth, that also coincided with the top of the dot-com bubble. We are now reading, the same formation, suggesting that the Nasdaq has topped and value will continue to outperform growth for the foreseeable future. Here is another chart for the PE ratios for the stock market, also reaching the same levels, or surpassing, by the way, of the dot-com bubble top. Another one, the short interest for the Nasdaq is surging higher to the highest level since 2019. So the sentiment once again turning bearish against the Nasdaq. Here is another indicator. The Nasdaq 100 versus the S&P 500. The outperformance that is, of the Nasdaq versus the S&P 500 is also topping at the same level of, you guessed it, the dot-com bubble top, meaning that for the foreseeable future, if this holds, the S&P 500 should outperform the Nasdaq for the foreseeable future. Lastly, what about the put-to-call ratio? When you see lower readings in the put-to-call ratio, the market is extremely confident that there is no risk to the downside, that the market is in a solid, strong, bullish trend. But when this ratio starts to curl upward, the sentiment changes. Investors are buying more protection, betting for the downside even, because the risks for the market on the horizon become more evident, changing the sentiment that the market's bullish run is invincible and seeing the trend as extremely fragile. We are seeing the put-to-call ratio increasing higher, another indicator that the correction is not done yet. Moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? Retail sales, another inflation indicator, a very important number to watch. We have consumer sentiment, the import price index, and inventories, both important indicators for the supply chain. We also have Dallas Fed Kaplan, aka the chairman, because he loves chairs. He loves to sit, not because he's an actual chairman. Regardless, the man has been the most honest member of the Federal Reserve right now. And by the most honest, I mean that he tells the truth about 2% of the time. Anyhow, the man went on air a few weeks ago saying that the Fed should start thinking about tapering, that he is concerned about asset prices. So we will see, did they take Kaplan in a bunker and whip him and he's now back in line spewing the same propaganda about transitory and base effects? Or is he still speaking freely, and will he double down that the inflation data and the producer price index data that we got today are supportive that tapering should happen sooner than later? Anyhow, that's all I got for you tonight, and I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.